Precious Metal and Battery Summit 2018 here in Zurich. And with me now here is our good old friend Amir Adnani, the founder and chairman of GoldMining. And of course, we want to get a little bit of an update. Amir, pleasure to have you here as always.
Thank you for having me. Good to be in Zurich with you, Johan.
Yes, definitely. So GoldMining, the last interview we did at PDAC, maybe we can round up a little bit the last 8 to 9 months.
Yeah, so we've continued with GoldMining to maintain a very strong portfolio that, as you know, we've put together during this long bear market. In fact, I recently heard the CEOs of one of the major gold mining companies refer to the period between 2012 to 2015 or 16 as the dark period.
It is, absolutely.
And I thought to myself, well, it surely has been the dark period, but that's exactly when we have been making our acquisitions and our our resource stage projects that we have been acquiring. So I love the fact that we've been truly contrarian in buying projects during the dark periods. This obviously has taken a lot of time and resources to assemble what we now have, which is approximately 9.5 million ounces of global M&I resources measured and indicated. 11.5 million ounces of global inferred resources. That's gold only across a very diversified portfolio in 5 different countries today in the Americas, as you know. And geez, I really love this diversification, Johan, because I've seen so many instances now in the last year of single asset companies that might be doing really well, but you just have, let's say, one permitting hiccup or one environmental issue, and it can unravel the whole situation and really be painful. So I think it's important that not only have we built size and critical mass in gold mining, we have also done it in a diversified way, both political diversification, country diversification, project diversification. And the benefit of, I think, buying at the bottom of the cycle is not only do you get good deals, but you get to pick projects that are ideal or meet your requirements. For us, you and I have always talked about this. We're interested in projects in areas where there's other companies, smaller than us and bigger than us, active, exploring, looking for discoveries, looking to build a mine.
Infrastructure there already.
Exactly. There's infrastructure, there's action, there's activity, and that is something you can benefit from for future development, for future sort of outcomes that we could pursue. So, let's not forget that obviously the company also has copper as a byproduct. So our copper resources are lovely to have in Colombia and up in Alaska. But having said that, as you know, it's been also a very difficult since we saw each other in the spring. The US dollar has been very strong, and the gold price has obviously been under pressure. So all of that to say, I think it's been challenging to some extent to see what our sector here, and especially here at the Gold Summit, you and I have seen it. The sentiment is weak, but it reminds me of late 2015.
Exactly the same thing to me. Yeah. And then 2016 it turned. And I think also, as you just said, those were the dark times of the market. But I think you enlightened your company with very good projects during the dark time. And then you will benefit when gold and silver and also copper really restart next year.
And I think we saw that in 2016. So in 2016, we had, in terms of share price performance, you look at how we performed at the time. Of course, at the time, our ticker symbol was BRI for Brazil Resources Inc. With the name change, we're now ticker symbol gold on the Toronto Stock Exchange. But back in 2016, if you looked at our company and the measure of gold resources in the ground on a per share basis, we held a lot of value there. And as a result, that really made us a high beta name. When the gold sector really started to rally, you see the share price of gold mining, I believe that year, was one of the best performing gold stocks, outperforming the GDX by a wide margin. And again, it was because of the leverage to having significant gold resources in the ground. Since that 2016 run, we have increased our total gold resources, nearly doubled it through 3 acquisitions that we've made since then. One of those acquisitions we haven't even released our 43-101 reports for yet, meaning because these were accretive acquisitions, today we have even more gold resources in the ground on a per share basis than we did in 2016.
Yeah. So it's a solid basis, I would say.
I believe it's fundamentally solid. And look, I think in our business, as you know, it's important to also have the right balance sheet to go with the right sort of resource base. And I think the fact that gold mining is a debt-free company, as of our latest financials, we had just about $10 million of cash on hand. That's a good cash position for the company.
What, 2 years easily?
Roughly that amount, based on the sort of the projected estimates and whatnot in place right now. But again, all of that to say that it's the combination, I believe, of right balance sheet, especially no debt. This is key.
That nobody can press you.
That's key, because you and I have seen, I think, during the dark periods, going back to that now, what can really, I think, hurt companies, almost wipe companies out, is debt, right?
Yeah.
And I think for us, the fact that all of our acquisitions have been share-based acquisitions, they've been accretive. And I think now some of our investors also see the logic in what we've done, because every acquisition we made was basically, during the last bull market, a public company. And it was a public company with its own set of G&A costs, board fees, conference fees, all these fees. The fact that you stripped all that cost out and now one company can maintain this portfolio is also very cost efficient. And I think investors also really like that, because in the gold sector, every time you have M&A that helps get rid of unnecessary G&A costs. Look at even the Barrick Rand gold deal. I mean, obviously that's a big transaction, but nonetheless, the G&A savings in that have been
enormous.
It's like a mine, basically, when you do the NPV of how much they've saved by getting rid of unnecessary or duplicative G&A.
Yeah. But I would love to talk also about, let's call it the secret weapon, if you wanted to take like that, because it was very interesting. We were together this year, meeting us at PDAC. We met in Vancouver, and uranium price was something like $20, $21. Today, we are almost touching $29.
Right.
So best performing commodity this year, 40% up, And you have also uranium in the portfolio aside your gold. So I think this is factored in with zero today, right? But I think we both agree that uranium is in front of the next run, probably. Maybe not as high as the 140 we saw in 2007, but it could go to, let's say, $45, $50. And then your project, I think, has a beautiful value, right? Maybe you can give us an idea on that.
I think it is. I think it's a bit of a secret weapon, in the sense that obviously, as you know, uranium is very dear to my heart, and we're also very involved in the uranium business with my involvement at Uranium Energy. We have seen the longest bear market of any commodity in the last decade in uranium. And we're finally starting to see the price recover from this, very difficult kind of period since 2011 in uranium. I believe most people perhaps have forgotten about the fact, as you point out, that gold mining, through an acquisition we made in 2013 of a gold company. If you recall, in 2013, we acquired a company called Brazilian Gold for its gold assets. But they had sort of a legacy uranium project that we didn't think much of back then. And I believe it was 2 or 3 months after we had made that acquisition that Fission, who you also know very well, had announced some of the best drill results they had encountered.
Absolutely.
I don't think back then I don't think NextGen had made its discovery yet. That subsequently has panned out. Why do those two names matter? Because our uranium project is in Western Athabasca Basin, where those two companies today have well over $1 billion combined market cap and have done very well with those discoveries. So to be in Western Athabasca Basin and on trend with those discoveries, and to have basically accidentally ended up with this asset, paid nothing for it, and to have a joint venture partner in the form of a major player, Areva, now called Orano, is 25% with us on that project. We're 75%. There's been about $10 million of past work done. So look, it's I think a nice situation for gold mining shareholders. We're obviously a gold company, but to have this uranium optionality inside the company, we paid nothing for. And you and I know, I think when we see this uranium price get from where it is right now, and it isn't an uptrend, as you point out, since our last interview, the uranium price is up over 30%. It's so the trend is on our side. And I think projects in Athabasca Basin seem to always fetch value. It's like having an oil and gas concession in the Persian Gulf. Yeah. It's a good address to be in. You're always going to get value for something right like that. And so, yeah, I think it's a very exciting asset that no one cared about when uranium was at $20. But now with uranium approaching 30 and then eventually 40, I think people will look at gold mining and say, well, look, there's all these gold projects, but hold on a second. There's also this very interesting uranium project.
Creating value now.
Right, with a chairman and founder that knows the uranium business and a team behind me that I think will be able to extract the necessary value out of this asset.
Absolutely. So extracting the value of that asset, would that mean that you, let's say, restart exploration there? Let's say uranium is hitting the $35, $40 level to get prepared for it because of that partner you have in the project?
Yeah.
Or you maybe, I don't know, probably sell it at a high price or put something together there?
I mean, all I think we have stated so far, maybe in previous disclosure, is simply that we would look to monetize the project. Now, whether that's a joint venture or a sale, or maybe we spin it out into a new company and realize the value that way. I'm pretty certain today, if I had to answer that today, just within my own personal capacity, I would say it doesn't make sense for gold mining as a gold-focused company to be spending money on the uranium project. So we should separate it into maybe a separate vehicle or maybe joint venture for that to happen. But at $40 uranium, I believe you'll have many options to choose from.
Absolutely.
And that's the nice thing about having held on to this during this period while things get better, and now having the flexibility to do what's going to make more sense.
Absolutely. And I mean, also at, let's say, uranium $40, $50, this looks totally different and would be the same if gold goes to 1,400. Your projects look also really different.
Well, yeah, I mean, look, in our, since the very first acquisition that gold mining made in late 2012 until now, we have been making acquisitions for 6 years. And we have not yet, as a company, seen the gold price north of $13.50.
Exactly.
It's quite an interesting concept.
Absolutely.
So it's quite exciting to think about what kind of market value could we realize in a gold environment north of $13.50. And you can see how modest I think our expectations are, because we're not even standing here talking about $1,900 gold. No. We're talking about, can we see the price?
$14.50, please do so.
I think it's exciting to look forward to that, and it's exciting again to have the financial stamina to get there with again a good capital structure. Again, after all these years, all these acquisitions, we have 135 million shares outstanding. I think that's a good structure for a company that's been as active as we've been. All the share-based acquisitions and the capital that has been raised. So, it should be.
It looks good, I would say.
I think it looks very good. Yeah.
Fantastic, Amir. Thank you very much. It was a great update, and let's pray for the uranium price, and of course, let's pray for the gold price. Thank you very much.
Thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, it was Amir Adnani, the founder and chairman of Gold Mining, and you heard it. They have the secret weapon, the rare project for uranium in the Athabasca Basin, and hopefully, uranium goes up more and higher. We are now approaching almost $29, maybe 30 quite soon, and hopefully we have that by Christmas latest. So the project might get all of a sudden a lot of value, and as you heard him, he will then realize also value for the shareholders. And as said, the projects are phenomenal, over 20 million ounces of gold they have so far in the resources. So I would say check out the company, as I know it's very well known, but now it's way too cheap, the stock price. Thanks for watching us. Bye-bye from Zurich.